In this video we are going to learn final accounts, how to prepare the company final account or final accounts. Okay, the final account, let's see how we can prepare the final account. Here first the question what we have to do, the following trial balance is extracts from the books of account of Krishna on 31st December 2009. This is the question: particular debit and credit, furniture, motor vehicle, building, capital account, bad debts, provision for bad debts, sundry debtors and creditors. This is a debtors debit, credit side is a creditors. Stock on 1st January means opening stock, purchase and sale. This is a purchase and this is a sale. Bank overdraft, this is bank overdraft. Sales and purchase return, this is the purchase return, here it will give, this is the sales return. Advertising, interest on bank overdraft, we have to pay commission we are receiving, cash, tax, insurance, general expenses, salaries. The following adjustments are given below. Okay, adjustment given below: stock in hand means closing 31st December means closing stock was 32,500, 32,000, okay, 500. Okay, then depreciation, building at the rate 5%, furniture 10%, motor vehicle 2%. Okay, 850 is due for interest on bank overdraft, salary is 3,000, taxes and 1,200 are outstanding. Insurance amounting 1,000 is prepaid, already paid. 1/3 of the commission received, this one in respect of the work to be done in next year. Okay, we have to deduct 1/3 because we will collect in next year. Only 2/3 we have to take in this year only. Write off a further amount 1,000 as a bad debt, and provision for bad debt is to be made equal to 10% on sundry debtors. Okay, first we have to write off 1%, then 1,000, then we have to calculate 10% on sundry further bad debts. Okay, prepare a trading and profit and loss account for the year ended 31st December 2000 and the balance sheet as on that date. Okay, this is a trading and profit loss account. Okay, here I am writing, this is a balance sheet. Okay, let's prepare trading and profit loss account. Trading and profit and loss account. Okay, right here particular amount, okay, okay. First let's start one directly to the all. Okay, now write balance sheet. This is the balance sheet. You can write as on 31st December okay, this is a 2009. Okay, balance sheet as on 31st December 2009. Okay, here also you can write profit and loss account as on 31st December 2009. Okay, So now, okay, let's create. Don't go one by one. If you go with a one by one entry, it will take time. Otherwise you can also go for one by one entry, but go for trading and profit and loss account at a time. Easily you can prepare, and it also help you to do not miss any single entry. So let's go one by one entry. Furniture should be come under the balance sheet. Here you can write as liabilities. This is a balance sheet. Amount, okay. Assets, amount, okay. Here also you can write credit, you can write debit amount, okay. Here credit, here debit amount, okay. Now let's go for all the entry. First entry is furniture 6,400 or motor vehicles 62,000. This should be come under the assets. Furniture, okay. Here make tick the entries which have the adjustment, okay. Tick that entries. For example, on furniture we have depreciation on 5% on furniture, 10%, okay. Building 5%, 10% furniture, motor vehicle. So furniture, motor vehicle, building, we have the adjustment entry. And bank overdraft, okay, the bank overdraft, interest on bank overdraft also we have. Then salaries and taxes, these are taxes, and these are salary, we have adjustment. Insurance, we also have adjustment on this only, okay. We have double adjustment on this. So tick like this after start the entries. And motor vehicle 6,000, this is 6,400 and 62,500. 6,400 and motor 62,500. Otherwise also you can came by one entry. Like if you want to prepare trading and profit, you can directly prepare this one. For example, what are the entries come into the trading and profit account? You can directly write furniture, no, it won't come. Motor vehicle, it won't come. Building, it won't come. Capital account also, bad debts also won't come. Provision, sunny debtors, opening stock will come. Opening stock, okay. Opening stock will come. This opening stock, how much opening stock is? 34,600. This is the opening stock. Then let's see again what it come. Purchase, after opening stock, purchase 54,750. Purchase has an adjustment, okay. And purchase amount should be kept inside 54,750. 54,750. Leave one space, go for another one. After purchase, bank order won't come. Salary and purchase return won't come. Purchase return, definitely it will come. Here is the purchase return, it will be in credit side, okay. Here minus purchase returns, okay. Otherwise if you remove this minus also you can put. purchase return is minus 1250. Okay, now next entry, bank overdraft, salaries, purchase return, advertising, interest on bank overdraft, commission won't come, cash, taxes, general insurance, salary also won't come. This is all indirect expenses. Salaries, indirect expenses, general expenses, taxes, cash is assets, commission is a income, interest is a indirect expenses, advertising indirect expenses, salaries and purchase return we have taken, bank overdraft is a liability, purchase and sales we have taken, purchase. Okay, these are debit entry. Now go for credit entries like purchase, furniture is asset, motor vehicle asset, building asset, capital account is liability, bad debts is a indirect expenses, provision for bad debt also, sundry debtors, creditors is a asset and liability, stock we have taken, purchase, but sales we didn't taken so far. Sales is a, how much sales we have written also, 1,54,500. okay, we have written also sales return. Sales return is total how much, 2000 minus 2000. okay, means next what we have any other thing after purchase, sales, salaries, advertisement, indirect expenses, bank order is a liability, commission no, cash is assets, tax in this is indirect. Now come to here, stock in hand on 31st December 2009 was 32,500. so right here closing stock is 32,500. Don't write here, right here 32,500. so now we have completed. okay, okay, let's calculate. okay, the total here we have to write to gross profit, it is gross profit to gross profit. okay, and it should be with two amount, to opening, to purchase, okay, to purchase return. Otherwise for purchase return no need, just you can also take into the minus, means less, you can write like this. For sale write 2, here write less. For closing stock also write 2. Now tally this one, after 1,54,500 minus 2, 1,52,500. okay, here 250 minus, if we deduct 250, 500 will get 54, 1 we have deducted 53,500. okay, now which amount is bigger, this one 150, this one, add this one. okay, here what you will do, okay, if you add this one, this is the amount. okay, means if you add these two, 1,85,000. okay, 1,52,500, 132,500, we got 1,85,000 less. Now minus this debit amount. Okay, minus this amount, 1,85,000 minus 34,600 minus 53,500. Now what? Let's see. Okay, from 1,85,000 we have to deduct these two amount. Okay, now we are getting 96,900 is the gross profit. Okay, okay, here also 1,85,000, 1,85,000, 1,85,000. Shit. $1,85,000 we have got it. Okay, now this gross profit you have to transfer to profit and loss account. Okay, right, by gross profit. Okay, this is how much gross profit we have got, 96,900. Now let's start with the entries. Okay, to P&L entries. Let's see, furniture is asset, motor vehicle asset, building asset, capital account, liabilities, bad debts. Right, before bad debts, okay, you can even write bad debts downside here also. To bad debts. Bad debt amount is 1250. Okay, because we have adjustment on bad debts. Next, okay, here after bad debts, provision for bad debt. Provision for bad debts also you can write here also, no problem. By provision for bad debts. Provision for bad debts means some of the persons whom we have trust that they can be given. Otherwise, a provision is a sum of amount keep aside for to meet the future contingencies, means future bad debts. That's why. Sunny debtors data is asset, liability, stock we have taken, purchase, bank overdraft is a liability, sale and purchase done we have taken, advertisement we didn't take. So right here I am writing here to advertising. Advertising expenses is 4,500. Okay, let's go after advertising. Interest on bank, you can also write here to interest on bank. Interest on bank is total 1180 because we have adjustment on this. Okay, now let's go interest on bank. Commission, it's a receipt, is a income. Bad debts is a 2,000 amount. Commission, by commission, actually on commission we have some adjustments, so 3750, we'll see it later in adjustment. Then cash is asset, taxes and insurance, right here to taxes, and insurance. Taxes and insurance are about 12,500. Now let's go to after taxes and insurance we have general expenses. To general expenses, general expenses total 7820. Now go for salaries. Here you can write salaries on the always on the top. First I start with the salary. to salaries. If it is given later, so take like this, or take all the entries later. You could take salaries on the top. Salaries 33,000. So we have taken all the entries from the box. Now come to the adjustment. Stock in hand means closing stock. It will affect on trading and balance sheet. Depreciation on building 5%. Okay, so we all the depreciation we have to take here. To depreciation on building. Depreciation on building is how much depreciation? 5%. Okay, the total amount is building 75,000. 75,000, okay, into 5%. How much? 75,000 into 5%. We have to take depreciation for building. How much it will be? If you take 7,500, then the depreciation will be 3750. This is the building depreciation. Now to depreciation on furniture. The furniture amount is, and that is 10%. Furniture 6,400. Okay, 6,400 into 10%, you will get 640. Now to depreciation on motor. Now the depreciation on motor is how much? 20%. Depreciation on motor. Okay, and the motor car amount is, motor vehicle 62,500. So take here, and that is 20%. 62,500 into 20%, you will get 12,700. Sorry, 12,500. Okay, these are depreciations. Now if go for further entries, 850 is due to for interest on bank overdraft. 850 is due. Add due. Due is how much? 850. Now add 850. Okay, here you have to write, can even write plus 850. Okay, but it is not taking, so directly you can take 850. Now the total amount also you can directly take, otherwise after at the time of calculation we will take. Okay, after 850, salaries 3,000 and taxes 1,200 are outstanding. Salaries here, add outstanding is it 3,000, and this one, okay, 3,000, this one 36,000. You can add at the time also or later also. Okay, here also you can add 1,030. Sorry, 2,030, already 1,02030. Okay, now taxes, insurance also has outstanding. Outstanding means add outstanding. How much? 1,200. Now go for 13,700. Go for, sorry, yeah, 13,700. But we have one more thing here. Okay, let's see. Insurance amounting rupees 1,000 is already prepaid. Prepaid means already paid, so less this one, less prepaid. Okay, here 1,000 less 1,000. Okay, now 12,000 and this one 13,700 minus 1,000 is answer 12,700. This is the amount. 12,700 is the amount. Now 1/3 of the commission received in respect of the work is to be next year. 1/3 means 3750 into 1 divided by 3. How much you will get? 1250. 1250 should be less. Minus 1250. 1250 should be less. Now the amount is 2500. Okay. Now write off a further sum 1000 as a bad debts, and provision for bad debts is to be made equal 10%. Where is the bad debts? Here. Okay, here first write off. And write off bad debts is a total 1000. Now further add 10% of bad debts. 10% of bad debts. What is the amount for 10% of bad debts? Let's calculate here. Calculation of bad debts. Okay. Sundry debtors is how much? Sundry debtors 38,000 is a sundry debtors. 38,000 first sundry debtors 38,000. What we have to do? Less write off. Less write off is 1000 we have to minus 1000. Now our bad debts presently total is 37,000. From that we have to less 10%. Bad means on 37,000 into 10%, what we will get? 3,700. So what is the bad debts after 10%? It's a 3,700. Now you can also directly calculate this one. It's here. This one minus this one. Now present, what is the value of bad debt? 33,000. Sundry debtors is 33,300. How much? 33,300. This is the final value. Okay, this is the 33,300 our bad debts value. Okay. Okay. Now what is the bad debts amount? Is 33,700. So after deducting this one, where were we? Less prepaid to advertising to bad debt 10% here. Okay, and it should be okay 3700, and the write off amount is 1000. So now this is 3700. Okay, so after adding all means these three, add these three, it's a okay, add these three, this one, and this one, this one, this one, and this one. Now you will get total 5950. Okay, so now add the amounts. How you can add the amount? Total is how much? What is the total? 96,900 plus 2000 plus 2500. Now you will get 1 lakh man change. Here write to PNL. To PNL amount is this is total amount. From this you have to deduct salaries and minus this one, 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 again minus this one, again minus this one. Okay, now you will get 15,510. 15,510 is the answer you will get to profit and loss account. Okay, two profit P&L accounts carried down. Okay, total 15,500. Here also write total amount 1,01,400. Okay, this is the trading and profit and loss account. How you can create entirely? You can create. You can prepare trading and profit and loss account. If it is company name, also write trading and profit and loss account of XYZ Limited as on 31st December 2009. Okay, this is a trading account. From here you have to, here it is a profit and loss account. This is the profit. Now same as you can even prepare balance sheet. Okay, now you can go for one by one. Okay, let's go for one by one. How you can go? Okay, okay, here all is a liability. First furniture. Furniture is how much? 6,400. Second motor vehicle how much? Motor 62,500. It has depreciation also. So take here building. Building is building amount is 75,000. It has depreciation. Take inside first. Now capital account. Capital where you have to take capital, otherwise you can also take on the downside. No need for to and buy. Capital How much is the capital? 1,25,000. Okay. Again, bad debts we have already taken, provision for bad debts already taken, sundry debtors and creditors. Debtor 38, creditors 25. Okay. Now here take sundry creditor. Sundry creditors is directly take 25,000. Now take the debtors, sundry debtors. Sundry debtors amount 38,000. Now take the amount stock we have already taken, purchase sales, bank overdraft 28,500. We didn't take bank overdraft. Bank overdraft. Bank overdraft is 28,500, but we have interest also, so taken inside 28,500. Now after bank overdraft, you have to tick every increase which have the adjustment. Okay. After bank overdraft, sales and purchase we have, returns we have taken, advertising also, interest on bank overdraft, it is in given in column, means in trial balance. This only one time will be effect, that is in P&L only. Okay. Commission we have already taken. Cash is assets, take the cash. Cash 6,500. Next, after tax and insurance we have taken, general insurance and salaries. Now adjustment. Every adjustment have dual effect. First effect trading in P&L, second effect definitely in balance sheet only. Stock in hand 31st, closing stock 32,500. What we have to do, we have to take here also closing stock. That's how much? 32,500. 32,500. Now come for another depreciation in building 5%, furniture 10%, vehicle 20%. We have already created. Furniture 10% means less depreciation 640. Okay. Then motor less depreciation, motors 12,500 we have created. For building less depreciation is 3750, 5%. 5% is 3750. Okay. We can also change this amount colors. For example, this is a depreciation, so this is a minus entry, so I am putting it, this one is minus. Okay. Now what we have to do, interest overdue. Interest is due for interest on bank overdraft. Here add interest. Interest due, we have to pay loan and plus interest 850. Now salaries outstanding 3,000 and taxes 1,200 are outstanding. Outstanding salaries 3,000 directly, and outstanding insurance should be 1,200. Okay. Now insurance amounting 1,000 already prepaid. Prepaid means all prepaids are come under assets. Prepaid insurance. Prepaid insurance is 1,000, directly put outside. Now 1/3 of the commission will be taken next year, means we have taken. Write off bad debts is how much? Bad debts less write off means 1,000, and again 10% less 10% means 375. Okay, this amount we have to less from sundry debtors. Okay, this is the last entry we have done. Now let's create the balance sheet. Total, this total we have already done, we have to add this one. Okay, now here what we have to do, add profit. Add profit. Profit was 15,510. Okay, this is the profit. What we have to do, we have to add this profit. Add this one, 28,000, 29,000, 350, 29, 350. This one, add this one, 1,25,000, 1,20,000, 30, 40, 1,40,000, 510, 1,40,000, 510. Okay, now here less this one from building, we will get 5,760. Now here after motor 50,000 we are getting. Here after deducting this 71,250 we are getting. From sundry debtors after deducting this, what we are getting, now we have already calculated here in down side. Let's see, 33,300 we got. How much we got here? 33,300. Now we have calculated everything so far. All the balance sheet we have calculated. So make it total. Okay. Okay, this is all total. Now it's 2,310. Here also should be the same. All these entries you will get little difference coming here. Why you are getting little difference is syndicate task we have taken so far. Okay, commission will be in next year, that's why we are getting. Okay, okay, commission you are getting. Okay, prepaid commission we have already taken commissions, means here total commission actually in profit and loss we have taken total commission 3750, extra commission we have taken, so we have to less commission here. Prepaid commission, how much prepaid commission we have taken? 1250 extra, you know, next year commission we have taken this year only. So now add all the entries. Here is the same amount you will get. This is the way where the balance sheet will be created with this entries. This is the question from which the balance sheet has been created. This is the balance sheet, and balance sheet is tallied. Okay, this is the balance sheet amount tallied. Okay, okay, we can see here these are profit and loss. Okay, profit and loss, these are trading in profit and loss. Okay, these are trading in profit and loss, and that is the balance sheet for a final account.